Where's Bitcoin at as I'm recording this? 83.5? That's pretty good, considering the absolute meltdown happening in markets right now. I mean, honestly, any traditional investor would be pretty happy that their investment is up almost 2% on the month. One reason that I love Bitcoiners is that there's people out there like Tom Lee who will look you right in the eye with no emotions and say, I think I could see, I don't know, 150K Bitcoin before the end of the year.
Fed and central banks are easing, QT's ending. I think that with positive Washington sort of tailwinds means I think Bitcoin can do well to the end of the year. I think it's still 150 or higher as possible. Okay. I know it doesn't feel like it, but once we get through this tariff and that agenda around tariffs, markets can look forward to things that could be positive.
You gotta love that guy. But honestly, 150K price predictions are pretty boring to me because I'm a macro guy and I focus on the long term and the big amounts of capital that are flowing throughout the markets. You see this chart? You can see that there's two boxes on here that are much bigger than all the rest of them. Bonds are a $300 trillion asset class. And when bonds are transformed by Bitcoin, well, we're not going to be talking about 150K Bitcoin. We're going to be talking about millions of dollars per Bitcoin. Here's the problem with bonds today. They're priced in fiat, valued in fiat, and coupons are paid out in fiat. It's a Ponzi scheme if I've ever seen one.
The fiat currency has consistently been bailed out by Fed printing and quantitative easing. Now that's the exact definition of what a Ponzi is. Bitcoin is not the Ponzi. Bitcoin is the solution.
Today, I'm going to be kicking off a two-part series on how Bitcoin is transforming debt markets. It's doing it at the government level, the institutional level, and at the level of everyday American people. And while I do that, I'll be doing a profile of some amazing Bitcoiners who are transforming these markets with new and innovative products that we haven't seen before. Let's take a look at how this transformation is going to play out together. This is Dante Cook with Bitcoin Simply. Let's go. One of the first proposals we've seen for a Bitcoin-backed bond comes from Eric Weiss, the guy who orange-pilled Sailor, and Brian Estes. They call it the BitBond. This was proposed as a U.S. government instrument where the government would back a bond by 99% fiat and 1% in Bitcoin. Preston Pysh gives a great example of how a Bitcoin-backed bond in this scenario would work.
This idea of a Bitcoin-backed bond is very simple, just like this. Okay, so let's walk through it with a 1% backing of Bitcoin. So I raise $100, and Danny knows that not only is he going to get the fiat back at the face value of 100, but he's also going to get 1% of that face value back in Bitcoin at the time that we initiate it. So I want to raise $100 with this Bitcoin backed bond that's 1% backed. Danny gives me his $100. I immediately go and I buy $1 worth of Bitcoin with the 100 that I just raised. I continue to squat on that Bitcoin for 10 years. I keep paying him 5% in cash, fiat cash every year. And then at the end of the 10 years, I have to come up with the $99 from somewhere. Okay. And I have to pay him that back. And I also give him the $1 of Bitcoin that I bought 10 years prior that's been sitting in Bitcoin that whole time. And I deliver him that Bitcoin. Okay. That's what a Bitcoin-backed bond is. So now let's think about it. If Bitcoin, which is priced today at $100,000, let's say over that 10-year period goes to $1 million, now you really have, in fiat terms, $10 worth of Bitcoin that has protected a lot of that debasement that I would fully expect happened over that 10-year period of time in fiat terms. And so for him, this becomes a protection measure against inflationary impacts. And, you know, if there's one thing that I think the world, and you can see since COVID, the bond market has just been devastated, absolutely wrecked in the valuation of what these bonds are worth, because everybody's starting to price in the inflation, and they're looking at the fiscal deficit, not only in the US, but every other country around the world. And they're saying all this fixed income bonds are denominated in dollars, and I'm going to be crammed down my throat the face value of these bonds whenever they mature. And so for the last year, when you look at Janet Yellen and the Biden administration, you know what they did for the $7 trillion that they issued over the past year? It was all short duration issuance. They couldn't put 20, 30, 10 years on the bond. They had to put 1 year on the bond, because if
Why
they
is
put
that?
well, nobody would buy it.
If you've been paying attention to this channel, I've been talking about this phenomenon a lot the last several weeks, in that the United States government has to refinance $9.2 trillion worth of debt in the first half of this year. And that's because Janet Yellen and others were trying to sell long-dated treasury notes, but no one would buy them. Because it turns out that the full faith and credit of the United States government doesn't mean as much anymore. So people buy 1 year and 2 year treasuries, which is putting us between a rock and a hard place right now. Plus, we're entering into an inflationary period, which means that although you will be getting a return nominally, in real terms, the coupon that you receive back from your bond will be worth less than the amount of inflation increase that is happening in the world, meaning you are getting poorer with every check that you get in the mail. And this is the real opportunities that Bitcoiners see. And the proof is in the pudding. MicroStrategy is a great example. As of February 14th of this year, their convertible bonds have outperformed Bitcoin itself. And that's because investors like the option of protecting their principal or downside in a fixed contract, and they also want to participate in the upside potential of Bitcoin. And this is leading people like Pierre Rochard, Bitcoin OGs, into the fray. And he hopes to buy $1 trillion worth of Bitcoin over the next 21 years through his new company, the Bitcoin Bond Company. For those of you who don't know who Pierre Rochard is, Pierre's been writing about Bitcoin since Bitcoin was $25 a coin. He co-founded the Satoshi Nakamoto Institute with a few of his friends that houses the most comprehensive list of articles around Austrian economics, cryptography, and freedom money. The man also ratioed Elizabeth Warren in the New York Times with a viral video about Bitcoin mining being bad for the environment. And he gave what I believe to be one of the best 90-second presentations about Bitcoin at the Texas Senate Committee meeting on the 21 bill. Take a listen.
I began researching Bitcoin when I was a graduate accounting student at the University of Texas at Austin in 2012. Over the past 13 years, I've written extensively on the investment case for Bitcoin and contributed code to open source Bitcoin projects. In 2020, I invented the concept of a government strategic Bitcoin reserve. Texas should acquire a strategic reserve to hedge against future uncertainty. While the state is currently blessed with a thriving economy, we must prepare for future downturns that could negatively impact tax receipts and existing state investments. Public trust in financial institutions has eroded due to a lack of transparency, but Bitcoin is a unique asset because it is fully auditable. The code is open source. The monetary policy can be independently verified by anyone using a normal computer. The Bitcoin software downloads the entire history of the ledger. Every transaction is checked to make sure that nobody is creating Bitcoin outside of the issuance schedule. And Bitcoin can only be issued through a competitive public mining process, unlike other cryptocurrencies such as Ethereum or XRP. Bitcoin is not dilutive, as there will always be fewer than 21 million Bitcoin, a finite scarcity. The average Bitcoin has been held longer than 2 years, and Bitcoin will continue to accrue long-term value. So now is the perfect time to make a strategic investment. Bitcoin software is engineered to maximize reliability through decentralization. There are no single points of failure. Thanks to this conservative approach to protocol development, Bitcoin continues to stand out as the digital gold of the 21st century.
There's no question that Pierre's a legend. So I wanted to ask him his thoughts about the Bitcoin Bond Company, what he's doing, and how he thinks it's going to transform markets.
So the Bitcoin Bond Company plan is to acquire $1 trillion worth of Bitcoin over the next 21 years, if market conditions permit. And the way that we're going to do that is by having a series of securitization transactions. So at a regular cadence, to go to the market and to see where is the risk appetite, who wants to try to outperform Bitcoin by taking on more risk, and who wants to have downside protection and a clarity on the yield that they want. So this is very much an institutional product. What we want to do is increase the adoption of Bitcoin. I think that retail already has the products that they need to participate, and that it's really the financial institutions, the pension funds, the endowments, the family offices, the hedge funds, the credit portfolios that are looking to have exposure to Bitcoin in a way that is structured and regulated. And so to do this, to get to $1 trillion, I think that, first of all, the Bitcoin market is going to continue to grow over the next 21 years. I think that Bitcoin's prospects from a fundamental perspective are very strong, and that the Bitcoin Bond Company is going to grow alongside with that and to provide a bridge from traditional finance to Bitcoin that is wrapping Bitcoin in a product that they are comfortable with, that they understand, and that they have a lot of experience with. And so that's the goal.
One of the biggest problems facing credit underwriters and people who create bond products is that there aren't a lot of good things to underwrite these days. There aren't a lot of markets that aren't already mature and don't have an equity opportunity to grow into. Pierre dives into that here.
From a bond perspective, I think that the challenge for credit allocators is going to be identifying assets that have even an opportunity to grow into a capital structure. And that's not self-evident in today's world, where most assets already are leveraged up and don't have the growth prospects that would enable them to have a long-term constructive view on being credit worthy, right? So I think that for investors who want to try to outperform inflation, they've got to start being more creative, and they've got to look at, okay, in an inflationary environment, what would keep up? What would do better? And on the other end, we have equity investors who are interested in trying to outperform Bitcoin. So it's a very different risk mindset where they're interested in taking on more risk. And historically, if we look at what products have been available to them, you could look at like margin trading, for example, on exchanges, which expose them to liquidation risk due to Bitcoin's short-term volatility. And so they're looking for capital providers that have a longer-term view to develop a relationship with, so that the funding is stable. When we look at the kind of the liquidationist model of leverage in Bitcoin, on one hand, it does help protect the lenders, right? That they are able to sell the Bitcoin collateral into a very liquid market in short notice. On the other hand, though, it reduces their capital utilization, because after they've liquidated the borrower, they're sitting on cash, and that capital is not being put to work. And so I think having a long-term view where they have they're looking at the recovery rate, that Bitcoin is going to continue to appreciate in value, that the collateral has not been impaired, right? The Bitcoin network continues to function. The Bitcoin are still there, and that it's going to continue to accrue value. So they can keep that money, being put to work, earning a yield, and work through kind of the short-term volatility with a long-term approach.
One of the reasons that people want to underwrite Bitcoin is that it's called pristine collateral, as my friend CJ Constantinos would say. It's simply a better asset, an asset that you don't want to sell. And that's why we've partnered with Ledn, the leader in Bitcoin-backed loans, which allow you to unlock liquidity in your Bitcoin without selling your Bitcoin. Whether you want an interest rate starting at 12.4%, which is half of the amount that you could borrow for credit, Ledn has issued over $9 billion worth of loans to over 40,000 customers, and they have over 1,000 five-star reviews. That's because their product is simple, intuitive, and fast. You can get liquidity in your account in less than 24 hours on average. Loans start at 12.4%, and the process is simple. If you want a $5,000 loan, you have to put up $10,000 worth of Bitcoin collateral. It's safe, secure, and custodied in cold storage. And they've never lost a single cent or sat of customer dollars. Go to learn.ledn.io/borrow to get started on your journey today. That's learn.ledn.io/borrow to get started on your journey today. Also, one of the things we believe here at Simply Bitcoin is not only that you should never sell your Bitcoin, but you should also take self-custody of your Bitcoin by removing it from third-party exchanges. And that's why we partnered with the Bitcoin Way. Members of their team will walk you through step-by-step how you can remove your keys from exchanges privately, safely, and securely, and take full responsibility over your generational wealth. Go to thebitcoinway.com/simplybitcoin to get a free 30-minute consultation with a member of their team who can help you think through how to manage your private keys confidently. That's thebitcoinway.com/simplybitcoin. The thesis about Bitcoin-backed bond products seems pretty obvious to people who are into Bitcoin. But I was curious to understand why a traditional credit underwriter might not consider Bitcoin to be a good product to underwrite. And I wanted to also ask Pierre, what are the positive reasons why they should consider this sort of product in a diversified portfolio of fixed income products?
I think it's counterintuitive because the first criticism from a traditional investor of Bitcoin is that it doesn't have any cash flows. And so they're used to thinking about, on the other end, having a borrower who is making a monthly payment or a quarterly payment, and that that is going towards principal and interest, and then that is going to get repackaged into a securitization offering. With Bitcoin, it's a very different proposition because we're talking about purely capital gains, right? That is that the value of the Bitcoin are going to increase over a term, and that whether the Bitcoin collateral gets liquidated at the end of the term or it gets refinanced, that ultimately the value is coming from the fact that Bitcoin's value has increased as a commodity. So normally an investor would look at that and say, well, that's very speculative because commodities on an inflation adjusted basis, if we exclude, even precious metals, that their value decreases, right? That people get better and better at extracting commodities, whether it's oil and gas or lumber or anything else. With Bitcoin, it is categorized as a commodity, but as we know, it's really what it is a scarcity. And that the amount of Bitcoin being mined every 4 years gets cut in half. And so it's not the case that if Bitcoin's value increases over the long term, that miners are incentivized to extract more Bitcoin. They can't. In fact, they can only extract less Bitcoin. So it's a very different commodity. And so that's on the supply side. On the demand side, we've seen that the demand for Bitcoin has grown tremendously over the past decade. And it hasn't just grown from kind of the retail grassroots perspective, but also from corporate adoption onto the balance sheet, namely MicroStrategy, and at the nation state level. So, with the announcement of the strategic Bitcoin reserve, I think that trend is going to continue. We're going to continue to see adoption of Bitcoin because of its fundamental properties. And that feeds into looking at the intersection between supply and demand. What happens if we have supply that is decreasing long-term and demand that is increasing long-term? The value of the asset is going to increase. And so for investors who are looking for collateral that is scarce, that is liquid, and that has a growing market rather than a stagnant or a shrinking market, this provides a really unique opportunity.
We have an asset class with a fixed supply at worst and a diminishing supply in reality. That's also being met on the other side with increasing demand from governments, corporations, and institutions, as well as individuals. That sounds like something the government should consider, right? That's exactly what Andrew Hone from Battery Finance proposes at the latest Bitcoin Policy Institute Summit. If the government were to issue $200 billion worth of bonds, or about 2.2 million Bitcoin, or over 10% of the supply, and they were to use 90% for traditional debt purposes and 10% into Bitcoin, well, here's a sort of payoff that you could expect.
What would this look like for the government, for the United States of America? We would dramatically reduce 10-year interest rates. We've already discussed that. Significant savings, $554 billion present value savings. Substantially reduce dramatically reduce the interest rates from 4.5% to 1%. That can ripple through the rest of the Treasury market and reduce mortgage borrowing, reduce auto borrowing, reduce small business lending costs, so many different advantages. Also substantially reduce the interest expense for the government. That's where the present value component comes in. Revenue neutral acquisition of an enormous amount of Bitcoin. And if you take a look at the CAGRs, and we have a symbolic one in there that I want to draw your attention to, but if you take a look at the 25th percentile compound annual growth rate, 37% per year, which, by the way, is exactly equal to Michael's bull case for Bitcoin in the year 2045 on a CAGR basis. That produces a government upside in this structure, and I did not plan it this way, it just turned out this way. That produces a government upside in the structure of 1776, 1.776 trillion US dollars. That's after 10 years. As you extend this out to 20 years, in the year 2045, the compound annual growth rate of the 25th percentile, 36.62%, produces a government entitlement of Bitcoin that is slightly greater than $50.8 trillion, which is the expected size of the funded federal debt in the year 2045. In other words, with this plan, we're in a position to defease the federal debt.
Bitcoin bonds represent a fundamental transformation in capital through companies like Pierre's, the Bitcoin Bond Company. And they also have profound implications for our government, which, if executed properly, could increase interest in U.S. debt markets. We could borrow at lower interest rates. We could eliminate our debt, and we could also create equity for our country in the future and moving forward. Sounds like a win-win-win to me. But this is just the beginning, and I'll be sharing more of how this $300 trillion asset class in bonds is going to be transformed into this $1.5 trillion asset class in Bitcoin. Part 2 is coming up. The Simply Bitcoin team would love to meet you, along with 30,000 other Bitcoiners going to the largest Bitcoin conference of the year on May 27th through the 29th in Las Vegas, the Bitcoin Conference. You might get to see some more exciting fireworks like a president announcing a strategic Bitcoin reserve, or you might also get some Simply Bitcoin merch that you might not find anywhere else. Get your ticket by going to b.tc/conference/2025 and use the promo code SIMPLY for 10% off your tickets. That's the promo code SIMPLY for 10% off your tickets. Can't wait to discuss bonds with you on the next episode. This is Dante Cook with Bitcoin Simply. Happy stacking.